Happy Friday, everyone, and welcome to episode 8 of our Home Buying 101 series, Lender Chat. Today, we are with Tracy Talkington, the Vice President of Lending at SouthStar Bank in Round Rock off of 1431. So, Tracy is going to talk to us today about what a portfolio loan is and what the benefits are to having access to a portfolio loan in some circumstances. So, Tracy, it's all you.
All righty. Well, thank you for having me on today. I appreciate it. So last time I was on, we talked a little bit about our Hope loan, and that is what's called a portfolio product. So you have this big branch of, loans that fit into the conventional FHA, VA, traditional bucket of a very vanilla borrower who fits all the right parameters, who doesn't have any variants that go outside of what's called Fannie Mae and Freddie Mac guidelines. Those kind of loans can be resold on the secondary market. So if you've owned a home before, chances are shortly after closing or within a couple of years, you've gotten a letter that says, hey, your servicer has changed and you need to now make payments to somebody else. The reason that happens is because the file essentially is transferred. The loan is transferred to another lender. Everything of yours that you signed at closing moves with it. So there shouldn't be any changes in your terms or any major differences from what you were doing before, other than the person you're paying is different. And why people go with those loans and why those are the majority of what goes on in the lending world is because the rates are so much better on those secondaries called secondary mortgage products. Those loans, since they're able to be resold over and over again, are more attractive because you can get them off, a lender can get them off their books or buy them when they need them. So they can be traded more like stocks than portfolio products. So when we're talking about a portfolio loan, a lot of times these are going to be your smaller banks, community banks, credit unions. They have products that are specifically that they own, and there are still guidelines that have to be met. So if you apply with a portfolio lender, you're still going to have to meet certain criteria, but it's going to be different than what you need in order to get those traditional loans. So for example, our Hope loan offers no down payment. And that is not something you can get with FHA or conventional. You can get it the VA if you're a VA buyer, but that's a kind of a different realm. But so for Hope, we keep those loans at SouthStar because we can't resell them on the secondary market because they don't meet the guidelines that are needed for that. So as long as that loan is alive, it will most likely stay with SouthStar Bank. So with other portfolio products that we offer one for people who are challenged as far as credit scores, they've had a blip, not necessarily just, I don't like to pay my bills. That doesn't work with our portfolio product, but let's say you started up a new business and it failed and you had to file foreclosure, but you've been doing really good since then. That's something that could hurt you with a traditional loan. And so we take those scenarios and see if they fit with our portfolio loans. The trade-off there is that your interest rate is likely going to be higher. You may be on an ARM loan or a different kind of a structure for that product, because the ultimate goal is that you want to get back into a traditional loan with a lower interest rate. Once those little blips in your past have cleared and been far enough in your past that you are now acceptable for a traditional loan, you're going to want to refinance out of a portfolio loan if it's geared towards that kind of a product. There are some other types of portfolio products I know of that are out there that are for, let's say, if you're a doctor, there are no down payment programs for doctors, where if you try to go with a conventional loan straight out of med school, you're more than likely not going to get a lender that will accept that unless you go through a portfolio product where that's part of their guidelines that says, hey, we accept brand new doctors. All we need, is your contract to get started. Or, there's so many variants in what could be offered to you other than just a traditional loan. So the main point being, if you're either in a specialized industry or if you are challenged one way or another, you can't seem to get a traditional loan, that's when you want to look towards those smaller banks that offer portfolio products.
Now, one situation that I have had come up or heard mentioned in the past is someone that's got a ton of assets. They're not necessarily liquid, and maybe, like you said, they've got some blips on the radar, but those assets, if you're asset heavy, that can offset a lot of negatives with a portfolio loan, right?
Absolutely. So we're still going to want to make sure that income qualifies. But yes, we take a much broader picture of your whole financial background on our portfolio loans. We can highlight things that say, hey, you know what, they had this in their past, but look at what they're doing right now. Or look at the assets that they have. With our products, we're still going to need to qualify. You do have to have some sort of income coming in either through those assets or through W-2 employment, whatever it is. We still need to qualify the loan. But yes, having assets is definitely a favorable thing when you're talking portfolio for credit challenge type issues or financial challenge issues.
Okay. So the bottom line is the portfolio loans that SouthStar Bank offers can just be a good alternative if you do have a bump in the road and you need to buy a house, or you want to buy a house. But it's nice to know that there are some other options out there beyond just your traditional Freddie, Fannie, USDA, VA.
Exactly. Yes, there are definitely more options. Honestly, I was in the business for 3 years before even I, as a lender, had heard about portfolio loans because I worked for just, an online broker and was just churning through files through traditional means and never came across this type of a program until I was introduced to it about 3 years into the job. So it's not something that everybody knows about. And I hate to think about those people who get that first no from a lender and they stop there. It makes sense. And if it feels like, I can afford this. And yes, I had an issue, but it's not happening to me right now. And it's in my past. Don't stop with just, a traditional lender who says, yeah, you're not going to be able to get a conventional or an FHA or even a VA loan. You know, don't stop there. If the goal is to own a house, even if we can look at that file and say, yeah, you're ready right now. Or we can also help guide and say, okay, we can't do it right now, but let's work on these things. And then we're going to get you there.
I'm so lucky that I found out about a portfolio loan really early in my career because one of my favorite clients who's become a great friend, she needed one. She was 1099 completely. There was some little blip that would not allow her to go the conventional route. And so luckily we had the option of the portfolio loan. She got to buy her house. She since sold the house and paid cash for another house. So I mean,
That's
great.
awesome.
She was a great client for them. Well, and for me too. I love her to death. But anyway, so it's nice to know that we have that as an option. Got it in our back pocket.
Absolutely. And, if you can go the traditional route, you're probably going to get your best interest rate and best terms. Unless you're one of those specialized industries where they pull out like the doctor programs or executive programs. In those cases, they might actually be getting a better interest rate or better terms through that program. So there's kind of the two different ways a portfolio can go. It can help those higher income, higher educated, or it can also help those of who are struggling. And it just takes contacting each of those lenders directly, getting them on the phone, getting a loan officer on the phone and saying, hey, here's my situation. What products do you have for me? Especially if you've already been declined by another lender for a traditional loan, tell them, here's what happened and how can you help me get over that?
Yeah. Well, and that's why I have a list of great lenders, and I suggest to my clients that they talk to more than one lender because not all personalities mesh and every program is different. Everybody's got their little ups and downs. This one may have a better interest rate, but I'm only going to be in the house for 5 years, whereas this one has a lower upfront fee. And you just kind of have to balance it out with what your goals are. But having a good list of lenders is one of the really valuable services that your realtor can provide.
And that's exactly what I was going to say. I would say that is why, and I'm glad you brought it up because that is why you're a phenomenal realtor is because you don't have just that set three of a traditional lender. Here's the three, options that you have, and your realtor and your lender are teaming up together to make sure that you get the best deal possible. And your realtor is the first line of where that starts, is guiding you towards people that they've worked with that are reputable and helping you find that. So, if you don't feel like you're getting a solid list on your own, make sure that you're involving your realtor. Find one that you want to work with to purchase the house, and hopefully they will have that good list like you do.
Well, and this realtor is very grateful that you are on my team. So thank you very much. If you have any questions, Tracy's number and my number are on the following screen. Please reach out. We're here to answer questions and we want to help.
Absolutely. Thank
All
you.
right. Have a great week.